right now, I think the focus of the market is the divergent tape. I've been writing about it every single day. I think that this is the most challenging environment for day traders because you have divergence. Now, what is divergence? Some people may not know. If you've got all the indexes laid out and you look at them apples to apples, you don't even need any indicators up. Just put up all of the indexes and you look at them. If they have similar chart patterns, great. Then the indexes are working together. And typically you get the cleanest moves because if all of them are up or down together and the chart pattern looks similar, those are when you get the best times to trade the indexes. But if you have an S&P that's looking like it's breaking up and breaking out, making a higher high, or NASDAQ's making a lower low, or Russell is doing what it's doing, it calls for a very difficult tape. And I think that's the important part about being an index trader is finding which index to trade when. Because I think today we'll just focus on choosing the different indexes because it's actually the perfect environment to look at and go, which index should I trade? And some of you may say I don't trade other indexes, but what I'm going to show today, I think will be a good lead as to why I would trade one index over the other and how I go about doing that.
Yeah, I think that's great. I saw your tweet this morning, right before we started the show. Exactly this, right? And we've been talking about it. That's why we do the daily chart review is to see what's happening in each of these markets. And we call it systematic trading, right? If they're all trading together, it's systematic. It's kind of a greater force than the individual indices. I will say, Anthony, I don't know if you find this, earnings season can really mess up that
Oh,
systematic trading, right?
no doubt. I mean, especially if you have one market that's really throwing everything off, like yesterday with Tesla, I
Yeah.
mean, it's going to make it challenging. And this is what happens right now. I think when you're heading into, an election, you're heading into the fourth quarter, you're heading into a time where the Fed is cutting, but how much are they cutting? I mean, you have all of these different crosswinds along with earnings, which is going to cause a lot of confliction within the indexes. So let's go to the charts and let's take a look here at starting off. I have the Dow up, and the reason why I have the Dow up is because yesterday the Dow was actually the market that when I looked at it, I was like, okay, the Dow is probably the cleanest for what I was looking at. And the main reason was because when I looked at the Dow, I said, you finally had that top Bollinger Band and bottom Bollinger Band get flat. And I
Mhm.
was looking at this yesterday and I was like, okay, maybe we're in some mean reversion with it. And when you pull the Dow out and you look at it, and the reason why I say mean reversion, if you haven't followed what I've been talking about for a while, is like, it's basically when you have um, top and bottom Bollinger Bands get flat and you rotate below the 5-day moving average, which we had a couple of days ago. And then you see the follow through. And now we're just kind of like boxed in the 70 to 30% area. And like yesterday was like that full mean reversion day all the way back down to roughly, I think I have the 34 here, if I'm not mistaken. Yeah, the 34. And so this was a tape yesterday that when I was looking at, I'm like, okay, I kind of want to be short this one and just because it's in a mean reversion tape. So when we look at the indexes, like right now, I look at the indexes and say, I want to start with the one that's been the leader, which has been the Dow to the upside. And then I'm going to look to see what mode they're in. And they're just really mean reversion consolidation. And everybody look at this is a simplest way to do this. I like the 20 period 3 standard deviation Bollinger Bands. I like, 8, 21, 34 moving average. And just look at how flat this looks, Tom.
Yeah.
I mean, I'm not a big slope guy. I've written about this, but when they're all flat, it means the averages are flat. It means volatility is flat. There is nothing when nothing is sloping. It just means that there's no edge and trend, right?
Right.
And so we went from like edge and trend higher here to like now it's just flat. And I expect this to carry on for some period of time. And this just means to me when I first see this, it's a two-way tape. Don't expect this market to show you any sort of breakout, good looking trend type day or any sort of leadership. It's going to kind of just be no good. And
Yeah.
then, the next one you're going to look at is the Russell, which
So real quick, Anthony, one thing we were noticing with the Dow is that while it was making all-time highs, it would still kind of decouple itself from the S&P, the Nasdaq. You'd see this big move at the beginning of the opening range down, and then it would recover and make a new high. And it just, that recency bias is enough to say, well, okay, new all-time high, new all-time high. It's easy to discard what you just showed, which is the Bollinger Band's kind of flattening and then maybe coming in a little bit. You're breaking below these different levels, these, 70%, 50%, 34 period moving average. It only takes a few days, right, to get with the program, a couple of bars, but still you have all that evidence of all-time highs. Oh, this market will turn around. It's been doing that every opening range when it makes a new all-time high, but it's, you got to fight that too, right? Here's the evidence that Anthony's providing, right? These flat markets, these failures to stay up, and now it's sideways. Like, we're in a different regime now.
Totally. Environment's changed. And
Yeah.
that's the thing, is when you're looking at which index to trade, this is the most important thing to me. I mean, just look at this S&P. I actually, this morning I took one short and it just kind of whipped me out, and I'll explain why I took it in a second. But
Yep.
it's, I'm literally on the sidelines at this point, looking at it, going, there's no clear direction. And, in the S&P is the one I'm focusing on. And I'm gonna get to that in a minute.
Yep.
But yeah, I mean, the Dow to me is now flat. The RTY, I said this morning in my note, hold my beer, let me whip everybody around. I mean, it's kind of
Right.
funny because it's just as like, I honestly could say that I don't remember the last time I've sniffed a clean winner in the RTY. I mean, I've stepped in and out of it probably, I don't know, let's call it half a dozen times at least over the last 2-3 months.
Yep.
And I would say everyone either ran my way a little bit and either clipped me out or, shimmy shake me out. It's like nothing was like good. It just is
Right.
like every trade that I looked to get into. I think this was probably the only one I remember. Yeah, right in here, I was looking for a little bit of a long. I think I caught one out of like my last 6 that
Wow.
was like, okay, I actually had one that kind of worked out the way I wanted to, right? Every other one, I mean, has just been like, oh, it's going to be good, ripper against me. I'm just like, man, this is unbelievable. And
Right.
so look at even here, they took out this high. I bought the dip on this day because I'm like, look, it's going to be range expansion. Bang, we break.
Yeah.
And so when I look at market environments, I'm just going, man, this market between this and the Dow right now, look at, you have to understand, I think people have to put into context what happens with indexes. And is the number one thing I look for is when I shouldn't be trading versus when I really should be. Because in my mind, I have to be able to take advantage of moments when the everything's working together and I just have to be in. I feel forced to be in. And so if there's anything that I've learned is that if I start getting chopped up or clipped, I just get really small and I'll let the market take advantage of me, but I'll let it take advantage of me in the most minimal way possible.
Right.
And that's just the mode I'm in when I see this type of thing. When you see flat Bollinger Bands, I just have one moving average up here for Russell. It's like, I've got no edge here.
Yeah.
And then you look at the NASDAQ. I mean, so this is something that we don't talk about a lot of time, but go back to August. Look at what we've had since then. Every Bollinger Band peak high has been higher or lower.
Yep.
We're
It's
compressing.
contracting. It's contracting, right?
And so what does that mean for the NASDAQ? I mean, yeah, it ultimately is still kind of grinded up because it's the NASDAQ. And I said the other day as a joke, I said, I'm really not interested in shorting it because I just don't want to either my head to turn completely white from gray hair. And I just, I like myself a little bit, right? I don't want to be in a torture chamber trying to be short the NASDAQ because the rallies, unlike the other markets, not that they're not all somewhat fierce, but the NASDAQ rallies like it breaks, you know what I mean? So
Yep.
it's just one of those things where I kind of don't really want to look to be short it. I want to look for areas where maybe I find, places to be long. But in this environment, man, this is tough. I mean, you've got an RSI also that's at 50 for all the markets. So it's just kind of like caught in the middle. Flat moving averages, flat Bollinger Bands. Don't get frustrated right now out there, everybody. If you're looking at your strategy and like, man, today everything's working great, and the next day it just sucks. Well, yeah, this is why. I'm trying to open your eyes to that because the number one way you can grow your P&L is by reducing downside That's area. That's the easiest way. You could reduce downside. It grows your P&L. It's in my experience, it's been the best way for me to grow my account is by reducing downside. The winners, when things start to work, most of us, well, at least I shouldn't say most of us, but many of us have found a way to where when we're making money, we'll kind of keep trading and we kind of take from the market. It's a skill you have to even develop because even that's difficult. But if you're in rhythm and you're making money, a lot of you have probably found ways to make money. But then when it gets really tough, it's like you're just hitting, full max drawdown. And that's where you just get killed and frustrated and just beat up. And like this is the environment that happens. And so right now, the NASDAQ of all the markets, what I'm noticing is like yesterday, the move itself was like, it wasn't as weak as everybody else. And I feel like it's trying to be the upside leader a little bit now. It's kind of shifting from what Dow's doing just because as we're compressing, we're still like always floating above these moving averages, trying to grind up. And when you look at the S&P is trying to follow that market.
Yeah.
But it's being pulled down a little bit by Russell and Dow. So when I kind of look at this scenario, I look at this day. So let's unwrap it. We know that NASDAQ is trying to rally now. It's kind of trying to take that upside leadership. It's not really there yet, but it's trying. Dow and Russell are in mean reversion sideways markets. S&P also similar to Dow in the fact that it's still in somewhat mean reversion-ish. It's like kind of caught in here. So what I immediately look for is opening range. So the first thing that I'll look for, and actually, I think I actually might even look to sell this here in a second. Let's take a look at it. So what I look for is opening range. This is a 30-minute volumetric. And I'm going to get to that in a second. So you actually could see here, this is what I did, and it shows my actual trades.
Yep.
In the micro. And so I tried to get short earlier. I don't know why I had shown them there. And I'll show you in a second why. You got delta is negative. Okay. Yep. You got delta is negative on the day. So selling has been dominant. You have opening range, the high of the day. We took out the opening range low. What I looked for is once the market can go up, and I was watching the way it was trading around the VWAP, I'm looking to sell VWAP or 1 or 2 standard deviations with stops just above it. And that's the stop I got stopped out on. I did this on the micro. I also did it on the E-mini too. I got stopped out on both. But the reason why I did it is because delta's been negative. And when you look here at this point in time, I thought that was a pretty good high. See how we're like trying to go up. We talk about the squeeze highs. It actually squeezed me out on the high tick because as it rotated back up. It is what it is. But, I tried to sell it and you saw that the selling pressure came in here pretty good. And now that we're actually taking out this low, I'll look to sell a rally. Now I like to use it in micros and I'll also do it in E-mini S&Ps. I try to like almost scale it between the two products because I want to be small enough to where I'll try and hold my micro with a little bit of a wider stop. And my S&P, I'll try to like sell and hope it turns right away. And then if it goes against me, I'll just burn out of it, right? And so the reason why I do it in kind of a 2-tier fashion is because if it's going to go down, I'll sell S&Ps and I'll keep the micros with a little bit of a wider stop. So then I'll use the S&P, the ES, as the one where I try to take a little bit more size with a tighter stop and hope it rotates immediately versus like the micros. I'm like, okay, I'm just going to hold these and let the stop work. I don't think enough people kind of look at that kind of philosophy, but I do that a lot because I don't want to say I forget about the micros, but I'm kind of like, look, if they're going to break 30, 40, 50 points, I'll sell a few and I'll just kind of let them go and I'll try to work my S&P trades.
Right.
And so the reason why I like to look at opening range in this scenario is because opening range, and I'm using a 3-minute, gives me the guide is like, what's the delta doing? And where are we versus opening range? So when we look at S&P, you've got opening range high. You saw we took out the low. Watch the rotations. I keep seeing selling come in just above VWAP. So I've been trying to sell like right around it or above it and just give myself a stop just above second standard deviation. And like I said, unfortunately, it kind of keeps happening. I only did it once, but I'm trying to kind of time this perfectly. When you look at it here, so this is a scenario. Let's go to the micros. Let me just try to get in one right now. I put it in at 46. I want to sell one standard deviation up to VWAP. I kind of missed that one. I should have been able to sell 675s, but I was talking about it. But this is a time where I'll sell this rally. And now, really, it shouldn't get, they're going to be good, they shouldn't get above VWAP. So I'll put my stop up there. I have my actual limit. This is one of the cool things about Tradeovate. I put limits and restrictions, especially when I'm coming on live streams. I'll limit myself to 3 contracts across the board in every market I'm trading. And I do that just because I don't want, I want to be solely focused. I like to do a third, a third, a third. I've talked about this.
Right.
But now I'm looking at it going, delta's negative, staying below opening range. VWAP's still in the middle of the day. But when you come back to order flow, you continually see it. I mean, there is no buying really. And the buyers are getting trapped above 48.50. So I could be short small and I can get nicked a few times here and still be well within my risk per day of trying to sell a rally. Look at this buying here, trying to get above VWAP, how the buyers keep getting stuck. You see that?
Yeah.
They couldn't get above VWAP. So it's like, for me now, I want to sell that rally.
Right. Right. So that's the squeeze, right? So all those buyers are holding a position that's underwater. How long can they hold that, right? And as the first one says, you know what, I'm out. I'm taking a loss. That just puts more selling pressure, right? And eventually that more and more people do that. Ideally, that's the thought behind that squeeze. What I see here too, Anthony, is you talk about institutions and institutional trading and hedge funds trading. They get rated on the VWAP, right? They want to sell above VWAP. They want to buy below VWAP. If they do the opposite, they're not doing their job well, right? So, on a down day, on a bias, you say it's two-way trading, so it's really hard. But on a down day, you would expect more selling above VWAP. If on a bullish day, you would expect more buying below VWAP, and that might help your case with the direction. But on a two-way tape, it's so tough to say, there's more, even though the cumulative delta might be negative at the time, it could also be profit taking, right? If sellers are coming in at the top, okay, we're going to sell at the top of the range, and that's going to push cumulative delta down, but that just might be profit taking too, instead of, entering orders. So very tough to do on a day where VWAP just doesn't hold as support or resistance.
Yeah, exactly. And that's why I didn't do anything early because I'm like, okay, do I want to sell the retest? I watched the retest that blew through it. Either way, if I sold a pop anywhere in here, I was going to get stopped out on it because even if I sold it here, I would have put a stop above 2 or 3 standard deviation. Bang, they would have got me. I sold it here. They stopped me once.
Right.
So now here, I look at it, go my sell zone because Delta continues to grow to the sell side. I know they're sellers of rallies. And when I go to my order flow Delta, they keep every time the market tries to buy at 8/4, 8/2, I expect sellers here.
Yeah.
No, so I expect sellers up around here, and my stop is tight. I go back to it. I'm not going to get super aggressive on a tape like this, but if I'm going to sell something today, I'm going to sell a rally. I'm not going to sell a break. You cannot sell into a break in this market. You'll just get your shirt ripped off. It's just the way it is. And I've been selling rallies small, giving myself $4 or $5 of risk, and they still find that stopping. You're like, man, I waited to sell that thing and they still got me.
Right.
And so I'm very, very small, but I see that I'm looking for spots where, because here's the other thing is the potential with this, I think is pretty high. Because if we start to stay below here, if we take out the overnight low, man, I kind of think we go all the way back down to yesterday's low. And the reason why I say that is because anytime you're in a range bound type market and you got all these moving averages here, this thing is a whip. I could see, start getting below here. There's nothing, I don't really have anything to stop it for 50 points.
Right.
So
right.
It's worth it for me to take a few shots at being short for $3 to $5 a risk to make 50. I'm not saying I'll make full 50, but I easily can rotate out of this at 1-to-1. And all I need is 2-to-1 ratio. And, I get my money back for the other loss. I trim it off.
Right.
But you have to be, you've got to be committed to waiting to sell the rally. This is why I like standard deviations a lot, because I see how they're trying to slope a little down now. I want to be a seller up into where the buyers get squeezed. So to me, 49 quarter down to like 46.75, 46 half. I just sold one there as a starter, but I want to sell up in this area because of that reason. And I go back to it. I go back to my order flow. What's happened here? Where's the lot of the volume taking place? Look at the bars where majority of the volume is taking place today. I don't know why I lost my right in here.
There we go. Yeah, right.
See all that? All of that's taking place around 48 half to 49. But
Yeah.
longs are getting trapped above 50. And then when they get back down below it, you see sellers tried to push earlier, couldn't get it. And on this bar, the buyers tried to, and they just couldn't. And so now this area becomes really key because if it stays below here, I think that you're going to go out and test this. This is an old naked, basically high volume bar from a 30-minute bar yesterday. I like to look at those. Comes in around 37, 38. I think in the short term, that's where they'll make the range. And so again, I go, look at, I've got minimal risk for at least, I think, I'm going to be risking here somewhere around $4 to make at least 10. Because if they start to break, I won't buy these back.
Right.
I mean, these are
Right.
ones I won't buy them back. I'll wait. And my first buy would probably be around 37, 38. And then if it got below there, I would just watch to see what it did with yesterday's low, and I'd use a scaled stop strategy. But you just got to be really patient in this. And I continue to write and talk about it. Small and smart, sell rallies or buy breaks, whichever one you kind of decide to do. You cannot buy into momentum. You cannot sell into momentum.
Right.
And I've made that very clear in the way this tape looks. And so I picked the S&P today. Let's go back to where we started. The reason is because the S&P right now, it's been going with the Dow. It hasn't gotten as weak as it. But if the NASDAQ starts to falter, which we saw a little bit earlier, the NASDAQ, which it's kind of still really not doing much. It's all within opening range today. At the opening 30 minutes, it's really done nothing, the NASDAQ.
Right.
If you really think about it, it's total inside day. I like to go with the S&P because it's the easiest way for me to manage risk. You got Russell and Dow weak. You got NASDAQ that's trying to lead higher, but if it falters, the S&P downside is decent.
Yeah.
I mean, it is what it is. I mean, I don't love being short lately. I really don't. But in these scenarios, my risk reward is tight enough to where I could be wrong 2-3 times, walk away for the day and be like, okay, I took my hit, but if I'm right and this thing starts to go, I think the move can be somewhat significant.
Oh, I completely agree. Everything you said, Anthony. We've been seeing this, kind of divergence between the, E-mini, S&P, NASDAQ, which one is kind of vying for the most bullish or least bullish. It seems to have switched recently, and I think you're right. E-mini is trying to take that load again. NASDAQ, I think the story there though, in earnings seasons, you still have what, 6 of the 7, or maybe even 7 of the
Yeah.
magnificent 7 to report. There's upside there, right? Whereas the E-mini S&P 500 companies, yeah, they'll get a lift too, but not as much as the NASDAQ does. But you're right, more volatility in the NASDAQ. Once it finds a direction, good opportunity there.
Yeah. And also I flipped back to E-mini S&P because now I'll watch it. I go back to it. I do a 2-part execution here. I'll use some micros to just get in because I'm not as price sensitive. It's like, okay, let me get in. I'll still wait to sell the rally. But if I watch this S&P tick up here, I already know I'm short micros. I already got my stop in. It comes up in here and I see that it can't get back in opening range. It can't get back above the VWAP. I see Delta continue to grow. I'll hit the bid with the S&P with a little bit more size. And if it goes my way right away, I'll rotate out of some, put my stop up top, and I'll trade that with really tight stops more aggressively. I'm not going to give a really wide stop in the bigger contract. So this is, I think, something that a lot of people can look at is sometimes you just need to be in a little something with like the one lot, or, I'm going to try and get up to maybe, a few micros and just to kind of get myself in the position. And if the S&P, I wait for the points to where it gets right to that point where maybe I see a little squeeze happening. And all of a sudden in that moment, I could just get in for a turn. I sell a bunch, put a tight stop, rotate out of it, and then I sit back.
Nice.
And so I use both. The micro helps me be patient in the ES, and I'm not just over trading the market. And so you might get that blip higher where you're like, hey, I'm short some micros, but all of a sudden S&P, you're like, this is the top, this is the squeeze. I see it, bang.
Nice. Anthony, we've run up against time. Is there anything else we want to talk about before we close?
No, that's it. Today, just make sure I mean, obviously, we try to talk about trading other indexes, but I just wanted to give you guys a visual and understanding of how I approach using the other indexes. And you could use the same thing. Like some days it's the NASDAQ, some days it's the Russell, some days it's the Dow, and also know that there's micros. And also, I think maybe we spend more time talking about how I use micros and minis together
Mhm.
because it allows me to sit in a core position, especially if I think it has a wide potential, and you wait for the mini to kind of strike,
Yeah.
and I think it allows you mentally to feel like you're at least in with a small position, and then when the market gets to a critical point, you can then use a little bit more size.
Awesome. Anthony, thanks so much. This goes way too fast. Where can people find you?
And Anthony Crudele on X and anthonycrudele.com
Awesome. We'll do this again next week.
next week.
Thanks for coming. We will take a quick break, and Jim will be back with Sterling Smith. Stay tuned.
So, you want to be a trader,